Will the next few months witness a complete and utter altcoin mania? When it comes to the potential impact of institutional level ETFs on the cryptocurrency market, Kyle Chase is a well known voice in these online communities. Also, there are a few things that may have gone unnoticed in the past 6 to 12 months, but could have a detrimental effect in the coming months. Additionally, I would like to examine the new generic listing standards that have been implemented by the SEC to facilitate the filing of crypto ETFs by institutions. We'll also examine how Vanguard and other companies are letting their customers invest in these products after a long period of restriction. Even though I have a mountain of material pertaining to XRP, I would prefer to begin with Mr. Chase. Keep in mind that this retail is the fuel that keeps the lights on for the entire season. Without it, the alts won't get their spark and the scoreboard won't light up. Now that Wall Street is on board, we are starting to see some changes. The baskets of these new exchange-traded funds, ETFs, with exposure to alternative cryptocurrencies, are going to be fascinating. I thought that ETF baskets included a variety of cryptocurrencies. Though it's unlikely that it will have much of an impact, they will receive some publicity. It would be greatly appreciated if retail investors such as yourself could spark an altcoin mania. Savings are in the toilet and debt is at record highs. I told you so. Retail, then, isn't exactly flush with cash. Earlier iterations. That, I believe, is the reason behind the current situation. Then there's the fact that different altcoin cycles bring different kinds of value extraction tools. In earlier cycles, there weren't any of these tools. Instead, founders could use the money to build actual things. And some of them were. And suddenly, there were a lot of individuals concentrating on these new ventures that claimed to revolutionize society. Ecosystems like Pump Fun have emerged in the cryptocurrency space in recent years, enabling anyone to launch a token for a fee, regardless of their familiarity with smart contract creation or token launching. So the story goes. And what we found was a massive influx of individuals who were committing fraud, robbery, theft, and making promises, but failing to deliver billions. I would not be surprised if pump funds and similar schemes have squandered tens of billions of dollars in retail funds. That's right. The people behind the launch of 99% of those tokens didn't even believe in it. Their sole purpose in being there was to rob stores of their money. This is the reason why many of our altcoins have been silent. Because of this, we haven't witnessed any massive surges in the gaming industry, or, AI is still thriving. But there are other domains, like real-world assets, that we had hoped would have performed better by now. They are able to do so because many retail investors in the cryptocurrency market are currently short on funds. Plus, it's all down to these projects. The distribution of focus is minimal. But do I believe that retailers still have the ability to trigger a temporary mania? Probably yes. That will be caused by the green candles, the all-time high of ETH, and the overall increase in the crypto market cap. Still, if you see the markets rip, it doesn't matter if your bank account is empty. In order to participate in the final 3 months of the altcoin season, you might take a risk and incur some debt, which could lead to people getting even deeper into debt. And that's the source of the madness, in my opinion. All right? Thus, the US economy is currently experiencing a slowdown. For a while now, they have been reducing their pace. American companies are losing tens of billions of dollars, if not more than $100 billion, due to ongoing trade and policy issues. Please tell me how that will influence the future of the stock market or the cryptocurrency market. What impact will it have? Due to the ever-increasing size of the unemployment line and the Fed's dual mandate to reduce inflation and unemployment, rates are currently being lowered at a breakneck pace. We will lower rates and begin printing money again. In your opinion, what will transpire? People will have more borrowing options, which means they will accumulate more debt. Eventually, there will be no turning back from this debt cycle. Returning to the current situation with the SEC, let us now proceed. The generic listing standards were approved by the SEC. To avoid the time-consuming and personalized SEC review, these standards enable exchanges to list commodity-based ETFs, including those linked to cryptocurrencies. A company had to file a 19B4 process and an S1 registration before they could go in. On top of that, the SEC had to vote each time to approve or reject that product, and the mere act of delaying it took as long as 240 days. As of late, the SEC has made it easier. If a cryptocurrency has a futures or derivatives market, you can apply to buy or sell it on the spot market. Therefore, it is possible to approve any of these spot XRP ETF applications at this time. None of the deadlines in October, November, or even October 25th are necessary. If the SEC so desired, they could be approved today. More and more products are going to be approved now, in my opinion. Which items will be successful and which ones will be unsuccessful? That depends on the communities that support those specific products and currencies. What I mean is, I think you should probably keep an eye on this place over the next few months for anything that is about to be approved. Institutional adoption is now underway with the CFTC, SEC, OCC, Federal Reserve, and FDIC doing all in their power to lay out the rules of the road for financial institutions like BlackRock, Vanguard, and Bank of America. Thus, crypto can be accepted at the institutional level in the US. The annual cost of transferring funds between our trading partners and partner nations can thus be reduced by tens of billions of dollars. Give me a moment to play this. Almost every major platform now offers Bitcoin ETFs, so Vanguard investors who want to buy them don't have to go elsewhere. That is why I feel this way. We still don't know, but this is a precursor to a major shift. We spoke with Vanguard, and they assured us that they value customer feedback. It's being discussed. Thus, they are slightly opening the window once again. Yeah, it seems like they noticed a demand from clients and are trying to keep them on their platform for what they want. Yes, exactly. Is that an accurate evaluation? When researching this piece, I spoke with Eric once again. According to him, this wouldn't be happening if Bitcoin ETFs weren't so popular. But the incredible success is hard to deny. All things considered, the group's wealth is close to $142 billion. 80% of those funds come from BlackRock. Only 20 billion arrived this year. As a result, the demand isn't even decreasing. And now that the SEC is involved, more cryptocurrency ETFs may be on the horizon. Okay, I'll get to the point fast. Attempting to avoid selling these products to consumers was Vanguard's main goal. We aren't interested, right? Their CEO went so far as to say so on national television. I don't remember the exact date, but it was 6 or 12 months ago. He made it clear that they weren't interested and wouldn't be offering these products. Now, in the present day, you can see that these products are in high demand. Vanguard is in charge of $11 trillion. Seriously, that's a ton of cash. BNY Mellon has $53 trillion. Particularly in the US, that amounts to around 25% of the world's assets. However, with $11 trillion under management, there are a great many extremely wealthy people who would like to have access to these goods. If you're a customer at whatever, what if they can't get their hands on these products? It could be a gym, a bank, or something else entirely. What if, for example, a rival bank or fitness center were to open up shop next to the one you normally frequent? I mean, come on, X, Y, and Z start delivering top-notch services, hours, rewards, you name it. You start to wonder why you should stick with this specific bank when you can get so much more from another one. For Vanguard, that was the pressure. Failure to implement this technology would result in a loss of customers. In fact, that is the norm for the whole sector. I don't think anyone is prepared for the influx of capital, tens of trillions of dollars, that is going to flood this industry over the next 5 to 10 years. What this means for the altcoins we love is anybody's guess. I'm guessing it's going to retire a lot of people who are currently hearing my voice. You should expect to be very wealthy in the coming years, barring any catastrophic decisions you make, frauds you fall for, or other terrible events. The most difficult thing you've ever had to overcome was getting there. One of your greatest life challenges has been to hold on to the asset while it appreciates. But you're nearly there. Sure, I'd like to discuss a few other points at this time. RippleX maintained 80% for more than 2 weeks. The approval was granted. The XRP ledger has a new standard for tokens called MTPS, which were designed to address the real-world requirements of institutions and developers. To make asset creation and management easier for issuers, MTPS incorporate metadata and compliance features into standards directly. I broke down completely. Thursday is likely when this video will be released. In case you're curious to find out more, I highly recommend watching that video. On the other hand, it claims that this means quicker time to market for companies, make it easier to integrate with current systems, and lower operational risks. Means physical assets are safe on the XRP ledger, which is a distributed ledger system that prioritizes speed, accuracy, and predictability in settlement. In case you're curious, the white paper is available for reading at this link. Issuers have the power to enforce anti-money laundering and know your customer policies, which is the norm for financial institutions. Where necessary, they have the power to seize assets or put them on ice. So, they can freeze that account if they suspect a bank, institution, or event is possibly violating a law. Here we have clawbacks. What this means is that you can get your money back. Have you ever made a purchase from Amazon? This is totally not what I asked for, you think to yourself. I'll be sending it back. You should be able to receive a refund. Being clawed back includes that. Includes discussion of advertisements, metadata, such as bond terms or reserves, assertions, and the safe management of distribution using multisig and escrow. All right. We all know that after 13 years, David Schwartz is leaving his position as Chief Technology Officer, CTO, of Ripple. Residents have begun to take action. During Tuesday's stream, we discussed this extensively. Allow me to play this for you so you can gain further insight into David's situation. Holy cow. Some of the most significant XRP news in history occurred today. It was announced that David Schwartz, the Chief Technology Officer of Ripple, will be stepping down at the year's end. I'm stepping down from my position at Ripple after 13 years. He makes it clear that he has no plans to leave the XRP community and has been exploring new avenues for involvement. Does this work? Negative for those who own XRP. This just confirms my suspicions from the past year that XRP is entering a new era, in my view. Here we have additional evidence. The developer of the XRP ledger has also announced his resignation. It's fascinating to see where XRP is heading. I will remain here longer than anyone else. All right, it's proof. I've been holding out for it. This proves beyond a reasonable doubt that we are entering a whole new realm. Halt. Wouldn't you agree that stepping down is bad? Isn't it better? This is a bit perplexing, to be honest. According to David Schwartz, he's resigning so he can devote more time to his family. Also, he longs to be a creator, an innovator, and a builder once more, doesn't he? After 13 years of traveling the world, I think you'd find David Schwartz speaking at events all over the place. It must be quite draining. Internal organs. It took me 3 weeks to recover after a 35-hour flight. Doing that continuously is just too much, isn't it? Consequently, everyone needs to take stock of their lives at some point and make changes based on what they find. And I believe that is the case with David as well. Neither the positive nor the negative effects on Ripple or XRP, nor the fact that this marks a turning point are explicitly stated. As far as I can tell, it's just one guy making a difficult choice. It seems like it will be quite challenging. He will continue to be an integral part of the neighborhood. I am unsure of how Ripple plans to fill that position with someone of that caliber, but I am certain that they will try. To be honest, I don't see anything else. Whatever you mean by deep, dark things, I really doubt it. David, in my opinion, has served his time. What an outstanding job he has done. Now he is ready to go out and have fun. That should be given to him. All right, I found this to be quite intriguing. These individuals, the riddlers, are merely figuring out riddles. Please keep in mind that this was a post for the community. Bitcoin XRP USD, otherwise known as US dollar yen, follows. It's fascinating, CNY, Euro XRP. They proceed to disassemble everything. In my opinion, this is the solution. Also, XRP has poor liquidity, so banks won't use it. Now tell me what we're going to have in abundance. Well, liquidity is the key. Yeah, maybe I'm referring to that. But I think a significant portion of the value proposition of Ripple is the cryptocurrency XRP. That's another debatable point. We've also noticed that banks aren't exactly eager to convert their assets into cryptocurrency at the moment due to the market's volatility and the lack of deep liquidity compared to, say, the dollar as a clearing unit. So, when we work with banks, they're not quite ready for a model where you convert into crypto and then back again. And that is related to a great deal of things, including regulation, volatility, and everything else that is regulated. The randomness of events. Less of that, but more value, is what you should expect. I see. Additionally, XRP is trading hands with Bitcoin on the biggest exchange in South Korea. On one of the biggest exchanges in Korea, you're exchanging XRP for Bitcoin. Is this essentially a page about future events? Will XRP now account for 3% to 4% of the cryptocurrency market? Or will something else happen? When compared to other protocols, how much of a percentage do you think it will represent? Many fail due to a lack of communities, use cases, and fulfilled promises. Is XRP and other assets with a long lifespan going to get more attention? Moreover, you're witnessing absolutely wild annual percentage yields. Banks will never be able to compete with value like this. A vault in Centauri. At present, Eurofinance offers an annual percentage yield, APY, of 9.7%. Giving out XRP or RLUSD to a third party carries with it an inherent degree of risk. As a participant, you should consult with a financial advisor to learn about all of the potential dangers. If you can get 10% online instead of the 0.25% that your bank savings account offers, what are you going to do? So long as there is $1 million stashed away. Your bank is offering you $2,500 per year, but 9.7% is $97,000. The trajectory of this is obvious to anyone. 9.0% is a substantial sum. Hi. Tell me, where do you stand on this roster? You are still attempting to make progress, aren't you? Is that you? 1%? Are you among the top 1%? Got 6 million XRP on hand? I highly doubt it, unless your name is Jake Claver. Are you not here? Where exactly are you? At 2,300? 8,000? Or 10,000? Do you intend to keep climbing? Are you not here? Please, tell me. Nah, I'm joking. I'm curious to know if you're still grinding, but I won't tell anyone how much XRP you have. Will you be making more purchases? I was wondering when you would stop purchasing XRP. How much does it cost? Inform me. Hail, farewell. You shouldn't take anything from this video as advice for your money. The only intent here is to provide amusement. I do not have the training or experience to advise people financially. When in doubt, consult a financial advisor. Shift our focus back to the movie.